Okay? 71 cents. It moved up to 91 cents. So 2,000 pips. Who knows what the profit of that particular trade was? So we've set it at $10 pip, 20,000. Who can get excited about $20,000? Who can get excited in a few months of making that sort of thing? If you have the guidance and insight onto what the market was doing. Now, it's like anything. You wouldn't go off and start something unless someone showed you how to do it. And trading, particularly like this, having this sort of insight based off someone who already knows how to do this is where you will make a lot of money. You know what I mean? Now, before I even started trading, I wouldn't have known how to do it unless someone had shown me how to do it. But I followed them to the T, step by step, until I got to the point where I was able to make my own decisions. Because you can't do it unless you've got your own, unless you, one, are educated and you're confident to actually place these trades yourself. And that's what the whole idea of this course is about. Okay? So, yeah, that's pretty good profit. So what I'll do now is bring up Kel, and he'll continue with the presentation, and feel free to ask any questions, but just let us know so I can grab your microphone. No worries? Thanks, Kel.
Thanks, Lou. Hi, folks. How are you today? I'm just going to follow on from Lou and talk to you a bit about some of the more technical parts of trading foreign exchange, not in too much detail, but just to give you a rough idea of how the market kind of works, things like the spread and some of the market terminology. So the spread is the difference between the bid and the ask, or the buy and the sell price, and it's how the brokers make their money in foreign exchange. Unlike the share market or the futures market for you guys that are already trading, the brokers in the foreign exchange market don't charge you brokerage commission. They make their money on the spread. So if you do a share trade, it costs you somewhere between $20 and $100 to put the trade on and to take it off, depending on the broker that you're using. Okay, in foreign exchange that doesn't happen because the brokers make their money from the difference in the spread, in the difference in the price. There are two parts to margin. The first part of margin is the amount of money that you deposit into your trading account. It might be a couple of grand, might be $5,000, might be $10,000, depending on how much you want to put into your margin account. The really good thing about foreign exchange and how we can get to make substantial amounts of money from fairly small starting figures is because we're trading on margin. Okay, we're using leverage to amp up what we've got to increase our position sizes. So leverage is a multiplier that you apply to the margin that you have in your account to purchase or to sell the pair that you're trading. Now we can dictate ourselves the value of the pips that we want to trade, depending on the amount of leverage that we want to use. So the easiest way to think about leverage is, we go back to that one, is like a mortgage on your house. Okay, so when you go to buy a house, you want to buy a house worth, say, $500,000. You don't have to have the $500,000 to buy the house. You can have a 10 or 20% deposit, and then you can borrow the rest from the bank, and you can go and buy yourself a house. Okay? So same when we're trading foreign exchange, we do the same thing. So if we have $10,000 in our account, we can say to our broker or tell the broker we want to trade at 100 to 1 leverage. That means we're going to control $100,000 face value of the particular currency. So we've taken our $10,000 and effectively turned it into $100,000 by using leverage, which then means we get lots of bang for our buck if we get the trade right, and lots of not so bang for our buck if we get the trade wrong. Okay? So leverage kind of works like this. In Lou's example of the Aussie dollar, if we bought it when it was 70 cents, and it goes up to 71 cents. Okay? If we bought one Aussie dollar and it went from 70 to 71 cents, how much money have we made? 1 cent? Yeah. But if we say that we want to trade on a leverage of, say, 100 to 1, we're now going to trade $100,000 worth of that currency. So our 1 cent move now becomes worth, this makes it $10 a pip. So if we get our 1 cent move, or 100 pips, how much have we made? We've got a 100 pip move by 10 bucks, we made $1,000. Okay? So that's how the leverage works when we're trading foreign exchange. Okay? So we've gone from trading $1 to $100,000 with a $10,000 account using a leverage of 100 to 1. Okay? And we can vary this leverage depending on our account size and the amount of risk that you want to take. So this can vary anything from $1 up to $400 a pip, depending on how berserk you want to go. The things that affect foreign exchange or the foreign exchange market are the same things that affect virtually every market. The fundamental stuff like interest rates, political news and economic factors. Interest rates tend to have a very big impact on the foreign exchange market because foreign exchange is only the exchange of money. It tends to be dictated by interest rates. The Aussie dollar's been strong over the last probably 12 months because we've had the highest base interest rates in the world, which has meant a lot of capital inflow into Australia to take advantage of that, and that of course has made the Aussie dollar go up. Technical analysis too, using your charts for trading, analysing past trends and making future predictions about price movements. Foreign exchange lends itself very well to technical analysis. Because it's such a massive market, because there are so many players in the market, and because it operates 24 hours a day, the technical analyst concepts work really well in foreign exchange. So when we're trading foreign exchange, of course, we can make money if the market goes up or down. Unlike some of the more regulated markets, like the share market, it's very easy to get set and go short when you're trading foreign exchange. So we can be a buyer of a currency, we can be a seller of a currency, and because it's an off-market exchange, there's not a lot of regulation, okay, which is good and bad. Mostly it's good if we know what we're doing, mostly it's bad if we don't know what we're doing, so we want to concentrate on the good stuff. I use, and you know, everybody can do this, you can be a short-term trader or a long-term trader in foreign exchange markets. Perhaps contrary to some of the stuff that you might read, foreign exchange is not only suited to trading short-term. Okay, this is a long-term trade that we had in the Aussie dollar back last year, where we bought it at around about 72 cents and got out on a stop at about just under 92 cents. So it was about a 2,000 pip move, but it took a long time to unfold. That chart is 1, 2, 3, 4, about 8 or 9 months. Okay, so you can use it as a buy and hold strategy, the same as you can in shares and all that sort of stuff, just as easily as you can use foreign exchange to trade short term. Okay, so we can do it either way. Here's some examples of some short-term trading that our system generated. This is a chart of the Aussie yen from memory. Our buy signal is the green arrow down the bottom here, and our sell signal is the red arrow that you see at the top of the chart. That trade was a 40 pip profit in 35 minutes. Okay, so the previous chart was a $20,000 trade over 8 or 9 months. This is a $400 trade in 35 minutes. So you can see you can use the foreign exchange market for whatever time frame you choose to trade. This is an example of a trade to the short side. This was selling the Aussie against the US, again from memory. The red arrow at the top is where we sold it short, and the green arrow in the middle of the chart there is where we bought it back. This was a 20 pip trade in 35 minutes, a couple of $100 if you're trading $10 a pip. Not a bad return for half an hour's work. Again, you know, the benefit of foreign exchange to me is this ability to go short with consummate ease. You know, there's no interference by people telling you what you can and can't trade, which I think is pretty wonderful. in the free market in which we live. This is an example of one of our more medium-term trades, trading the British pound versus the US dollar. We sold it short, again at a price there, and we reached our profit target of 202 pips 3 days later. So we've had an example of quite a long-term trade, a couple of short-term trades, and this is a more medium-term trade. That's just the same trade in a bit more detail. This is our foreign exchange medium-term system that our FX clients are trading at the moment. It's made just over $82,000 profit in 3 years, and that's the equity curve. So from starting in January 2007, with $10,000 in your account, it would have turned it into a bit over 82 grand. And that's up till the end of February. So that's over 8 times growth in your capital in that time period. Over 136 trades, an average monthly profit of about $2,000. That's if you're trading at $10 a pip, which you're not all going to do, but I've just put the examples up as if we were. So the steps to trading, obviously, is enrol and join the foreign exchange program with us. Open a demo account, and you'll start receiving the trade alerts for 90 days for free to give you a insight into what we do and how we do it, and make sure that you're up to speed on it. The other thing that we offer is a auto trade service, and most of the clients, if not all, at the moment are auto trading, which means that you set your account up, when the trades come up, they're automatically generated into your account. So you don't have to worry about putting the trade on, taking it off, whether the trade happens in the middle of the night or 3 o'clock in the morning or all that sort of stuff. The computer automatically enters the trades into the market based on the orders that we give it. All our trades that we put on are always put on with 3 legs. One's the entry order, there's always a stop loss, and there's always a profit target. Okay? So we want you guys to have predefined risk every time you enter a trade. So you know if it goes pear-shaped, exactly how much you're going to lose. None of this stuff about sticking your trade on and crossing your fingers and hoping for the best or any of that sort of jazz, okay? It's proper, full-on professional trading. Risk management, we use money management strategies as your account starts to increase, all those sort of things. You got a question?
Yeah, so like for new traders, right? So I'm new into the market, I haven't traded before. I just deposit, say, $5,000 into an account, but I don't have time to trade. You know, I've got young kids. I don't want to be checking the computer and stuff like that.
Yep.
So you guys, like with the auto trader, I can just deposit my money and you just do it all.
Yeah, that's how the auto trader works. It does everything. Okay, so if an order is generated, it puts it into your account, takes the trade, puts the stop loss, puts the profit target, and the market does the work. Okay, so you're totally emotionally removed from what's happening in the market. It either wins or it loses, and that's the outcome. I think we've got a question, so you might need a microphone.
System. How do you change your pip size?
Yeah, just have to tell us that.
Right.
Okay, you can't do that. Yeah, or you can send us an email. Okay, but we work with you at the outset to make sure that your risk-return ratios are adequate for the amount that's in your account. Okay, so if someone puts $2,000 in an account, rings me up and says, I'd like to trade $10 a pip, sorry, we're not going to let you do it. Okay, it's fantastic if you get a couple of trades right, but if you get a couple of trades wrong, you're probably not going to have your $2,000 left. Okay, so it's important that we manage that pip size at the start.
Are you risking more money than you've got in your account, or
Never.
is the stop, like the stop will always do?
Yeah. We never want to do that, okay? We want to make sure that the stops are an adequate reward for the risk that you're prepared to take, I suppose, is the way to put it. So if you had a $5,000 account, if we're trading $2 a pip, You know, the biggest initial stop that we've ever put on in that system is 200 pips, so that'd be $400. Okay, but the whole idea of the trade is we want to get that stop loss down as quickly as we can once this trade starts to move in our favour. So whilst the initial stop might be quite wide, as soon as we get movement in our favour, I bring the stops down to lock in less risk, if you like.
So how many trades can we expect, say, per week, per month?
Oh, yeah, good question, Lou. It varies a bit, and it depends on whether you're trading the medium-term system or the short-term system, or the long-term, or the combo of the whole lot. At the moment, the last 2 weeks has been pretty busy. We've had a trade nearly every day. There was a period a couple of weeks ago where we went 5 days without anything. So it's going to vary as well, depending on market conditions and the setups and all that sort of stuff. But generally, that medium-term system trades about once a week, for example. And the shorter-term one, I'm just doing some work at the moment on a short-term system, which I just got finalised last night. We have to do some more testing and stuff on it, but it could trade once a day. Each currency pair once a day. So if we're trading 5 or 6 pairs, it might trade 4 or 5 times a day. But it's going to be much more active, and it will only be available to be auto-traded. Because if a trade happens at 3 or 4 o'clock in the morning, we just need the market to be able to accept the order without, having to ring someone up and go, "Hey, Fred, want to be in this trade?" And he's just woken his wife and family up and he's not happy.
So, Kelly, you're talking about a expert advisor system,
It's
like
EA,
computer
yeah.
software.
Yep.
So that 10 grand equity curve, 10 grand 82,000, was that using your own manual judgment as well?
Which one? Sorry.
Well, that one where you showed the 10 to 82,000.
Yeah,
over
that's
3 years.
Yeah.
Was that with an EA or? Was
No,
that
that's not with an EA.
That's
That's
with your
my own private trading.
Yep.
But we've in the process of writing that as an EA as well.
Right.
Yeah.
Okay.
So it'll be
you
auto-trading.
can elect, depending on what money you've got, you can say I want to do medium trades.
Yeah, exactly.
Or you can elect to do the combo, like you say.
Yeah.
Okay.
That's going to be personal choice.
Thank you.
So the other exciting thing for members of the foreign exchange program or any of other Jamie's courses is within the next week we're about to release a futures trading and a commodities trading program, which will be a subscription-only service for members of either the forex program, e-minis, or any of other Jamie's home study programs. There'll be 2 or 3 different signals in that. There's a grain trading system. There's a soft trading system which trades things like cocoa and sugar and coffee and cotton and all those weird and wonderful products. And there'll be a financial markets product which will trade bonds, the metals, and some of the equity indexes. So just to give you a little bit of a heads up, on the screen is the last 6 trades we've had in the grain trading system, and the results for the system since the 1st of January 2007. So if you would have started with $15,000 in your account on the 1st of January 2007, just trading one contract, your account balance would be just short of $61,000 at $60,900, or a 406% return on your 15 grand. With the money management strategies that I use, and we'll teach you guys if you come on board in that program, the account balance is just short of $264,000, this number here, and it's currently trading, I think, 7 or 8 contracts on an individual basis. So that'll be a subscription-only service, as I said, and you'll have to be a member of a 21st Century program to be a part of that. Over to you, Lou.
Thanks, Kel. So who liked those stats? You know what I mean? Like the last one where it was like $2,500 in 3 days. Who can get excited about that sort of money? You know what I mean? Absolutely, me too. And I do, because I get the SMS trades, I get the emails, and that is the benefit of this, is the fact that he's doing it on your behalf until you get to the point where you're going to be doing it yourself at some point. right? Hopefully within the next like 3 months. But still continue to take the SMSs and the emails and the advice of people that have done it before. You learn off people that have actually fallen over, lost money, donated money, until they've come up with a system that actually works. And that's why we have Kel on board. So that's great. Okay, so now, this is just an example here. Right, when this is going to be your new Ferrari. Right, this is the view of your office. Okay, right next to your beachfront, right? You're looking out the beach at the ocean, yeah? Who lives on the ocean? All of you. Excellent. So this is the view of your new machine, right? And it's just a trading charts, a trading dome, etc. So what happens is Kel will send me an SMS or an email on my phone. I'll open it up. I'll open a demo account, as he mentioned before. So the step by step. This is exactly what it looks like. So